You are watching Market Watch, the brief overview of the key events from the world of finance. On Wednesday, a landmark event took place. The S&P 500 index overcame the psychological mark of $5,000. It's not just about updating the historical maximum, which has happened several times already. In this case, it is important to take into account that buyers still managed to overcome the psychological barrier of $5,000. Please note that of the last 15-week candles, 14 are green. In recent weeks, the steady growth dynamics has been driven by strong quarterly reports, but the general mood in the market is shaped by incoming macroeconomic data from the United States. Let's also pay attention to the really active discussion of the prospect of changing the Fed's key interest rate. But apparently investors have already come to terms with the fact that in March it may remain at the same level. This is indicated not only by the growth of key stock indices, but also by the lack of obvious demand for the American currency. Nevertheless, this topic remains very important for the market and is still able to have a strong impact on the US dollar, gold, and stock indices. For example, an unexpected deterioration in key macroeconomic indicators from the United States will significantly increase the likelihood of a rate cut. In this case, trading volatility may increase sharply, putting additional pressure on the US dollar and even the stock market. Let's pay attention to the upcoming release of a report on changes in the number of initial applications for unemployment benefits. Economists do not predict an increase in this indicator, which also calls into question the expediency of lowering the key interest rate. After all, the low unemployment rate will not allow inflation to decrease significantly, approaching the target level of 2%. But an unexpectedly strong increase in the number of applications for unemployment benefits can have a significant impact on the markets. An unexpectedly strong deterioration in the U.S. labor market is a bearish signal for the U.S. currency, stock, and commodity markets. And now let's move on to the cryptocurrency market, which once again gives investors hope for a bright future. The bullish momentum coincided with another update of the historical high by the S&P 500 index. This once again confirms the dependence of the cryptocurrency market on the world's largest economy, or rather on the sentiment in its stock market. Bitcoin has again surpassed the 44,500 mark, but the activity of buyers above it remains moderate, because steady growth is possible only if demand changes directly for Bitcoin, and not risky assets. At the moment, we are seeing only general interest in the stock market, which also contributes to an increase in demand for Bitcoin ETFs. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.